Hi guys, in today's video we're looking at Plum once again. This is the newest round in 2024. Yeah, it's a growing fintech. It's quite interesting. European wealth management market estimated at 43 trillion, massive market opportunity, and they're fast growing. They've got record customer and asset under management growth in 2024, and they're backed by major VCs. And you can see all these VCs down here. Eurobank, I think, is a bank that they partner with. It is quite a cool app. I have backed it a few times with small amounts of money, but let's have a look here. 2 million customers, 2.5x in 3 years, 1.9 growth, 1.9x growth year on year, revenue boosting, and they're in 10 countries in Europe. 44% account growth since the last crowdfunding round, which I think that might have been in 2022, maybe, I don't know. Subscription revenue, they've got 80% gross margin. It's software as a service, basically, in the fintech space. We've got nearly 10x versus lifetime value versus cost of acquiring a customer. So that means, I don't know, maybe they acquire a customer for £100, but it gives them 1,000, something like that. 3 billion assets have been set aside by their customers. Problem, the solution. Plum is on a mission to help grow customers' money for life. Basically, banks aren't working, especially for younger people, and they gravitate to an app on the phone. And I think fintechs like Plum have really done better than traditional banks at this, and that's precisely why they're growing. So they offer savings, rules, stocks, mutual funds, ETFs, crypto, pensions, tax wrappers like ISAs, market-leading interest rates, and spending tracking tools. So they help you budget as well. There's a big market opportunity. Fair finance. Money inertia. So I think it allows you to build like good money habits and automated savings, a bit like money bucks, but the difference is these guys have actually gone European. So one, the subscription offer is predictable revenue, so that's a good opportunity. Two, they want to unlock further growth through more tax wrappers. They launched ISAs, but I guess they'll launch like leases and maybe SIPs and things like that. Three, they want to grow across markets, geos, countries that is. Four, they want to partner. They've got a top 4 partnership with a bank in Greece. Ability to continue to develop our app at speed in the UK and the EU. Okay. Revenue has grown considerably, whilst cash burn has decreased nearly 5x. So they've like 5x their number of users whilst reducing cash burn by 5x, which is very good. It's got 3 monthly plans. They have better interest. They make money from interest spreads. They make money on assets under management around 5%, and they have transaction fees as well. So it's quite good that they've got a spread of making money in different ways, a bit like a bank, I suppose. About 50% of people join the premium plan, which is £10 a month. I suppose that gives you a better percentage. So wealthier users, older people, people earning a bit more, they want to get 5%, right? They're not going to, if they've got like 10K or something, or 20K or 100K or whatever, then they obviously want to have more stocks to invest in. They want to have more funds to invest in. Oh, it looks like they've got a SIP fund here on the left-hand side. So they're doing SIPs. So yeah, I think that automatic investing, I think a lot of people would prefer to go with that. Yeah, 100%. Yeah. I like that. You get the card as well. I think the offering is really cool because they're kind of making saving money and investing like cool. It's obviously a different profile to other fintechs, like thinking ones that come to mind in America, like Robinhood, but they're like for gamblers, whereas this looks like a good option for a kind of middle-aged investor type, a bit like me, really. The kind of, I would say probably 25 to 50-year-olds would probably be interested in something like this. So they've ballooned their assets under management, which is really impressive. And that's because they're launching these tax wrappers, like Cash ISAs, which is a UK investment savings account, which is tax-free. So what I like about Plum is that they've really expanded internationally. So it's available to up to 50% of the whole EU population. So they've targeted large markets in Europe. They offer automation and the best UI, enabling users to set aside money. It's low cost, etc. And they've onboarded nearly 300,000 EU users. Third of the total app installs are from the EU at a 50% lower cost per install than the UK. This is what I've been thinking about and talking about for the other fintechs in the world. You know, if you're in the UK, like Moneybox is in the UK, if they're getting a 50% lower CPA, cost of acquiring a customer, why aren't they expanding? It doesn't, like, the actual cost of, you know, translation is actually minimal compared to the value a fintech gains from going international. And Plum get it, you know, Revolut get it as well. Monzo gets that. But there are some UK fintechs which are so solely focused on the UK. I think they're missing the larger market opportunity, and Plum is not. Plum gets it. They're international, and yeah, it's impressive. So they partner with Eurobank, which is like a massive fintech in Greece. You know, that fintech is actually active themselves in 6 countries. They offer a range of financial services, and they've got 4 million users. And they've got 80 billion in assets. So by partnering with them, like, Plum expects to get at least 400,000 new users. The Eurobank is going to reinvest some profit in Plum's marketing expenses, which is amazing. It means Plum are going to get like free, you know, essentially free users from the money they get from Eurobank, and it'll help that expansion in European markets with enhanced funding availability, and it will allow exclusive access in other EU markets where Eurobank has, you know, that presence. So going to open a lot of doors. So that's interesting. I suppose it's also interesting they're not partnering with other banks. You know, people might think, why aren't they partnering with, you know, with banks in the UK? Well, they're probably not doing that because they see it as maybe as a market risk. But they're going to these smaller countries like Eurobank in Greece. They've got, you know, large access to EU markets, but they're probably not going to risk the big markets like any market risk the countries like in the UK. Yeah, so there's no risk of anyone in the UK joining Eurobank, for example. So it's a win-win, really. Eurobank gets access to some of Plum's functionality, I suppose, and the user acquisition, the free marketing spend, it's very good. So they're going to, you know, do the product improvements, opening up new growth channels with tax wrappers. They're going to boost EU conversion to UK levels. I haven't said how they're going to do that. I suppose they're going to do it through the Eurobank partnership, and they're going to use AI. They're going to start to use AI. The cash ISA has really been growing, even in this year. Wow, look at that. That's amazing how much it's grown. So the assets under management have grown from like 0 to $500 million in like less than 6 months. That's like really impressive. It's an average of 7 million in net deposits per day. That's like crazy. So they're getting older people. Average age is 46. If the average is 46, that means there's going to be some 50 and 60-year-olds. So I would guess maybe that's the parents of younger users. If you're a 25-year-old and, you know, you show your 50-year-old dad or 60-year-old dad about Plum, then they may start thinking about it, you know, especially if they get good ISA rates and whatnot. Average income's going up because the users are older. Average deposits going up because people are wealthier and older. Average transfers going up for the same reasons. So that makes sense. Targeting an older demographic is quite interesting. And they've done that by expanding their tax wrapper offering, and are just offering like better services, 3,000 stocks, you know, as well as crypto, you know, so it serves a lot of different user profiles. Rising interest rates means there's an opportunity to capitalize on stronger organic inflows. That all makes sense. They launched the Cash ISA in March 2024. So they've only had it like a few months. Look, well, that's crazy. I thought they'd just like zip this up, so that was January, but actually they just launched it in March. That's like mad. So they have a very good market rate. So they're only 0.1% above Moneybox, but and that has actually allowed them to gain that market share. It's interesting. I invested in Chip and Moneybox as well as Plum, and it just shows you that that just having a very marginal difference in cash ISA interest rate does actually increase user volume and assets under management considerably. So people are putting more money in and taking less money out. They've hit the top of the money saving experts table. This is a big deal, by the way. I don't know. I've worked for banks and finance companies before WhatsApp, and Money Savings Expert is a massive portal where people like forum and people talk about it. And they also have price comparison tables as well. And if you get to number one on that, you get loads of users basically for free. And that's what they've done. They've looked at this and they've gone, let's have market beating rates, and we'll acquire customers cheaply, and they'll get onto the price comparison tables, Money Savings Expert, Money Supermarket, etc., and they'll get very cheap customers. That's really important. So yeah, they've got good ratings, Trustpilot score. I used to work for Trustpilot as well, so that is a good rating. 4.4 out of 5 is pretty good. I'm not going to read these. Financial position. I looked at this earlier. I was quite surprised because they're talking about, they said they have over 2 million users, but on the active user side, it's less than a million. So that's kind of interesting that, you know, only 40% are actually active users. Nevertheless, you know, it is what it is. 500,000 are depositors, which suggests 1.5 million people don't actually deposit. I don't know how that's defined, that depositors. I don't know if it's like monthly depositors or people that have deposited in the past, like above £1 or whatever, or I'm not quite sure how they define that, but either way, it's only, you know, a quarter of the 2 million total. Unless this is like not, maybe this is like per year. So maybe it could be that, like, I'm just trying to think that, yeah, it could be per year, to be honest. They haven't got like total users. This is slightly confusing, to be honest. I don't know if this is active users for the year. I guess it is. But if this is depositors for the year, is it net new depositors or is it total depositors? It's a bit confusing. I read it as total, which would mean only 25% of their user base are depositors. But if it's for the year, then it would mean, you know, that's probably nearly 2 million, you know, if you look at the 4 years. So, but they haven't made that clear. Anyway, annually recurring revenue, 16 million for the year. So that's up like 3 million like year to date. So that's really good. That could quite easily mean they top maybe 20 million this year. Yeah, and assets under management have gone up as well. Yeah, amazing. So yeah, they're still losing money, but this is kind of what happens with fintechs. They kind of lose money until they make money. But you can see the revenues like going up quite a lot. They probably could economize and make profits if they wanted to, I imagine. Their burn rate has decreased, but their operational costs have increased. But I suppose as a percentage of active users and things like that and revenue, maybe it's come down. So if you can see, the operating costs were 14 million and the revenue is 5 million, and actually it's only going up by 1 million in operating costs in 2023, but the revenue's more than doubled. It was, well, just about doubled. So they're actually getting more efficient as they grow, which is really important. But they're still losing money. But in the fact that they're raising money, you know, with VCs is good. And there's so much like positive press around fintechs. That velocity of finance is not likely to stop. The trend is upwards. So along, you know, if you think about other angel investments where, you know, they're losing money, like there's a risk to those companies that people stop funding them, like what happened with Meatless Farm in the vegan food market. You know, they were huge, valued at hundreds of millions, and then they went bust because a lead investor pulled out. I kind of don't see that happening with fintech because like there's a massive trend away from banks, and that's like only increasing. And it's more likely that like those, in terms of the markets Plum's looking at, they may be a little bit behind in the fintech curve, like Greece and Cyprus and whatnot, and maybe in some of those other countries like Portugal and Spain. So Plum actually has an opportunity to mop up like millions of users. I wouldn't be surprised if in like 5 years, like Plum has maybe 10 million users, and at that point, you know, all this gets much higher. You know, they might have annually recurring revenue of, I don't know, 100 million, and at that point, their operational costs are probably not going to like 5x. They might just go up 1 million or 2 a year. So in 5 years from now, they could have operational costs of like 20, 25 million or whatever. Then they could have revenue of 100 million, and profits could be like 80% of that. So they could be making like 80 million a year in profit. That's off, you know, I've just done that off the top of my head. But if they were to make 70, 80 million gross profit, and let's say net like 60, 70 million or whatever, that means they could easily be valued at over 1 billion, like easily. But even with a conservative valuation of like, let's say, 5 times earnings, it would still be, you know, 300 or 400 million easily, and it's normally done on forward earnings anyway, so it could be like P of 10 or something, so 600 million valuation. But let's see what happens. Look at what's happened to revenue. It's pretty impressive, and it's gone up 3 million in like 3 months. So like May 2025 is going to be substantially higher than 16. Assets under management are going to grow quite a bit because they're targeting wealthier users, and that partnership with Eurobank, they've got a decent team. This guy was quite an early employee at TransferWise. That's pretty good. I'm not going to read all of this. Fine. So that we've already looked at all of these pretty much. So there's nothing that new there. Okay. So I'm going to start sharing my screen and talk about what I think. To summarize, I think that Plum are doing the right things. Number one, they're expanding geographically. A lot of brands are worried to do that. They don't have the operational structure, the logistic structure, the know-how to do that. But I think that Plum does. They've kind of showed that. They've proven that, and I think they're likely to gain market dominance in a lot of those markets. So I could easily see them having 10+ million users within 5 years, and I think within 7 to 10 years it could be quite a lot more than that. It could be 30 million, 40 million users, and it could be really interesting. It could be a huge kind of fintech online bank type product. So rivaling kind of Revolut and Monzo. I don't know if Monzo and Revolut are growing as fast. Not sure. I did do a video predicting that Revolut's valuation would fall by 50%, and that's exactly what happened. So I don't know. I mean, I know that Monzo and Revolut are starting to make money now, but they're valued at originally, I think Revolut was valued at 30 billion. It's got devalued, I think, to about 15. But if you look at the differential between Plum and something like a Monzo or Revolut, let's just call them valued at 10+ billion. Plum's valued at 135 million. So that's kind of interesting. They're valued in this round, they're valued at 135 million, right? And they've got 2 million users. So let's say Revolut has 10 million users, but it's valued at 15 billion. I actually think Plum is probably fairly valued, even though it's losing money at the moment. Like I said, a couple of years from now, it could easily be making 10, 20, 30, 40, 50, 60 million a year. And that 135 million valuation would look quite low, especially if they grow earnings 20, 30% a year, which is completely doable. So I think Plum's pretty good. Actually, I like these fintechs. I think they're starting to work out operational leverage. They're starting to work out product expansion. Plum is cracking international expansion. There's nothing stopping Plum going to South America in the future, potentially as well, with Spanish and Portuguese. They'll have the infrastructure to go to South and Central America should they want to. Nevertheless, I think this runway, the long runway of Plum is decades. I think they can continue expanding in the UK and Europe for 10, 20, 30 years from now. The 25-year-olds that start having children will probably open accounts for their kids, and they'll encourage their parents to open accounts with Plum. So yeah, I think the sky's the limit. I think it's really interesting. I did invest in their last few rounds. I only put to be honest, I only put a small amount in. I'm going to have a quick look now about how much percentage I've put in, and I'll let you know. So yeah, I've put in about 1% over 2 rounds. So 1% total of my portfolio is in Plum, which is a lot smaller than my investments in Moneybox. But I'm starting to think that Plum's the better investment. In terms of Moneybox, I've got 10% of my overall angel investing portfolio is in Moneybox. And in Chip, let's have a quick look. I've got 50% more than Plum, so about 1.5%, something like that. So what would I have done differently? I probably would have invested more in Plum, to be honest. This isn't financial advice. I'm not a financial advisor, but just looking at my own investments and my own thinking. I mean, Plum was valued at less, before. I'm sure it was a much less valuation than it is now. They did do a round in 2022. Anyway, I like it. I think it's got a lot of growth factors to it. I know it's losing money at the moment, but with these kind of angel investments, you can't think about it right now. You have to think 10 years from now. It is a kind of 10-year type of investment. They're valued at 135 million, got 2 million users, but in 10 years, they could easily have 20 million users. So yeah, I like it. I'm going to leave it there. Remember that knowledge is power, especially the right kind of knowledge. And progress is everything. If you like these videos, make sure to like and subscribe. If you're the only one that's interested in investing, whether it's equity markets, property, angel investments, then please do share this channel. And I'll see you guys in the next upcoming video. You might like one of these videos that I'm about to see on your screen. Take care and I'll see you soon. Bye.